Welcome to TradeTheNBI.com. This is John. This report is for the 14th. Birthday has arrived, and just in time for the market to do, well, exactly as we kind of expected here. Every time we hit that 23%, it's been a tough one. And the reason being is we could see this beforehand. They were so close to the bulls trying to make a buy signal. They were right there. They just could not get that orange all the way underneath, which meant there just wasn't sufficient amount of support buying-wise. Algo derivatives really is what we're seeing. And boom, once the orange started to pop up, hey, I was like, be short below the 23, and the expected range target they would be looking for would be the 35.50. We tipped pretty close to it, close just above it, but we can already see in pre-market that they've hit that level again, and so again that becomes a huge factor as to being, can they bounce back above it, or continuation of the lower. We can see that there's a closing of this little bullish snake that was going within an overall bearish green below red, and green popping above red, so you had some supports in between here. And this often confuses people because it's like, yes, you can see that there's going to be some buying in there and some selling. And so you don't have to be afraid of either, given that setup. And lo and behold, that's exactly the way it worked out. Now, this is far more bearish, where you have cyan moving up, the rejection of the green moving lower, particularly with green heading below the red. So it doesn't bode well for longs in this particular case. So I'm definitely eyeing more towards that low and the 2600 previous algo number. And should probably be doing the same. Likewise, NASDAQ broke below its 23% and produced similar concept, but much stronger though. You can see it's got the rising green, falling cyan, so a lot stronger for NASDAQ stocks. However, that mix creates some interesting volatility issues. Euro debt, of course, Italy agreed to reduce their budget, which nobody believes they're actually going to do. So they said they're going to meet the deficit targets instead of overspending, but they're just going to overspend. So it'll be interesting when they try to find someone who buy their bonds, but hey, that's a different story. U.S. likewise situation with treasuries. People still flight to safety at this particular point has created a much stronger buy than rates would currently tell you. And of course, oil is still stuck in the doldrums, and there's no real change in sight given that shakeout reading at this particular point. Every time it attempts to put in relative buy signals, it works. You get a pop, but I mean, that's not even a move of any kind. I mean, Fibonacci's on there, no need to, because we can see what this is going to do. And likewise, gold just holding up there because that elevated value is just set for another breakout. That breakout will come as soon as there's some indication that wage increases or anything like that are starting to take place. It hasn't really happened in a significant way. Now, what an odd day. Obviously, I rolled over to the new contract, the see it with the ESH19. And yes, it was already short from a while ago, lowered the stop down to the algo level. Previous support point had been shorting in between, back and forth from all these different signals. So we started out the previous day with this little pop-up signal, and we ended up with a lot of little divergence. You know, every time we ended up with one of these space moves, we had a couple little deviations. This was a good one too, because it represents one of those where you have a cross, but what you didn't have was a really strong move lower of red, and that stasis point right along the zero line kind of held it in place, did exactly what was expected. The secondary signal that came in here was much cleaner, where you had the green really cross below, startup of the cyan, and then that steel crossing, all of them happening at the same time. That produced a little bit more drawdown, and the short never really changed. We ended up with some pops within it, but that steel pretty much remained above. And then right at the final, you could have picked any one of these to go with, since you were still in a short snake from, well, right about there, just right at the 23, a slight deviation, and then Right there, you ended up with the green moving below red, rise of the sign. So it's just that opening of the separation between the two, letting you know that the strength of shorts had increased, and then sure enough, that has created the entire cascade going lower. Never quite got that dip of steel coming below that you look for to cross above that would indicate that the short is going to end. And so when this crossed, it really didn't do anything, and we have steel caught between the two, which is just continuation. I love that when the orange is like stuck in the middle. Same thing right over here, orange just stuck in the middle between them. Continuation. So you get a lot of bounce, little noise, so to speak, and nothing. And sure enough, now we're off 21.5 already here in pre-market. So nothing out of the ordinary, I think, is going on. This was just about some of that changeover, and usually we get an odd day, but this was very tiny volume relative to that. So we would expect that to start to pick up now. I know the contract isn't in for another week, but needless to say, they always start that early. And if you wanted to be with where current price was reading, you had to switch over to the other contract. But it was crazy because we were seeing some that was like 10, 15 contracts, both sides of it. It was really pathetic, so to speak. But needless to say, sometimes you're going to get that. You just, I adjust size, so you don't trade as much size with it, but doesn't mean I don't trade the signals because it's still valuable. It's just you ended up with a little bit larger bar ranges just because there was such light liquidity. It was easy for them to push both directions. But once we got below that 50%, pretty much stayed below there, and that hasn't changed. So as we can see right now, no new buys even with the cross of the green and the having reached the oversold because no dip of orange at all. So that is the long and the short of it. Have a great Friday trade. Should be interesting. I don't see any reason why you can't just go with the ranges that we've been talking about. I've pointed out long time. 2666 there was the difficult one, and every time they hit any of the key algos that we had, the 2675 was the peak out point both times. We couldn't do anything when it got to each of those and just produced weak signals, and everything faded from there. And so I mean, my average is just a fraction below that from the other add-ins that I had. So all in all, good stuff. Keep at it, and if anything interesting pops up with these, I'll certainly put it up. These were a lot softer. They didn't have as dramatic, those real strong spikes that you love to see on dramatic moves, but it doesn't change the fact that they're still relevant and important to pay attention to. So there you have it. As always, trade well. We'll talk again later.